In the Carolinas, everyone's looking to Raleigh for big revenue growth. But over the past 9 months or so, Charlotte has really snuck up and is threatening to steal back the spotlight. Welcome to Apartment Market Dynamics from MPF Research. I'm Jay Parsons with your Charlotte update. Back in the 1990s and for most of the 2000s, the focal point of the Carolinas was Charlotte. But when the recession hit, a lot of attention went to Raleigh, known to be more stable because of its reliance on a lot of government and higher education jobs, while Charlotte was largely dismissed as a crumbling bank town. But a lot of the concerns about Charlotte appeared to be overstated at the time, and going into 2011, we identified Charlotte's apartment market as a potential top performer in 2011, and so far, that's looking to be the case. Let's take a look at some numbers here. Apartment demand. Charlotte has now logged 8 straight quarters with positive demand, including a big showing in 2Q 2011, nearly 2,000 units absorbed. And over the past 24 months, Charlotte posted net demand for about 11,000 apartment units. Very nice, and that's about 3,000 units more than Raleigh-Durham absorbed over the same time frame. And apartment occupancy. In Charlotte, occupancy is back up to 93%. That's a jump of 1.4 points just in the second quarter. Annually, occupancy surged 2.1 points. Among the large markets in the country, only Phoenix did better over the past year. And by comparison, Raleigh-Durham, occupancy there improved 0.7 points, although overall occupancy there continues to top the rate seen in Charlotte. And rent growth. Same-store rental rates in Charlotte climbed 1.8% in 2Q, and they are up 3.8% in the year ending June 2011. And that puts Charlotte right in line with the U.S. average. Meanwhile, Raleigh-Durham, which had ranked among the South's leaders in rent growth for much of 2010, has slipped back a bit, just hasn't been able to sustain that pace. Effective rents there improved 3.1% over the past year. Now, before we get into any more details about Charlotte, let's talk briefly about Raleigh-Durham and just say this. While it has not yet met the expectations that most people have put on it for 2011, the attractive fundamentals are still there. The employment base, the demographics, the stability, and so it's probably just a matter of time before this one gets going again. But let's focus on Charlotte. The bigger point here is that Charlotte may have lost its luster in the eyes of a lot of people during the recession. But again, like Raleigh now, Charlotte had a lot of those strong fundamentals that people may have been overlooking for some time. The economy is more diverse than most people think. The area is still a magnet for young adults. And one of the biggest concerns, which is an oversaturation of apartment supply, well, that issue was dealt with faster than most people, including us, expected. And perhaps to best illustrate that, we could take a look at the Uptown Dilworth submarket, which includes South End, a revitalizing neighborhood that just got inundated with new supply over the past few years. Occupancy took a big hit, but the submarket is already back near the essentially full mark, 94.8% occupied. That is up 13.2 points annually, entirely due to all that new product working through initial lease up. It's a big number, but that's just how hard this submarket was hit due to new supply, and it's bounced back much quicker than expected. And in turn, rents are jumping too. Same-store rental rates jumped 5.7% in the year ending June. Like a lot of markets in the South, the problem in Charlotte remains the bottom half of the market where there's still some vacancy issues. Going forward in the year ahead, we should begin to see more of those vacancies backfilled, but the big story should be solid to strong rent growth in top-tier communities and in the higher-end submarkets. So that wraps us up for Charlotte. For more details, please join us at our Southeast Conference in Atlanta on September 8th as we talk all about Charlotte and the other major markets in the Southeast. So until then, for Apartment Market Dynamics and MPF Research, I'm Jay Parsons. Thank you for watching.
Want more? Go deeper with MPF Research's apartment market reports. From a national level, down to individual metros, to specific neighborhoods, MPF Research has been providing unparalleled apartment market intelligence to the multifamily industry for almost 5 decades. Learn more by contacting us at 877-284-4938 or visit www.npfresearch.com and click on Market Reports.